It's amazing how much working in the ICU or in the hospital translates to real estate pretty good. Actually, a lot of my posts on LinkedIn, it's about the similarities between ICU medicine and real estate. So we talked about the different areas of specialty of people. Some people are very good at, like, what I have majorly focused on. I've done three deals. The name of our company that I formed with my wife is 3DS Capital. The names of our kids, we have three kids. All of their names start with a D. So
Oh,
Dasoyin, Damorin,
nice.
Dakumi. So that's where the 3DS came from. So 3DS Capital. And so we've done three deals so far with Excite Capital. And going into the first deal, we were able to raise a ton of money for that, and we did really well. I guess it was me getting my friends and family.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. Today, Scott Kidd, the Yacht Captain Investor Podcast. I have a new friend of mine, Lajide, here. And how you doing today?
I'm doing great. How are you, Scott?
Very good. Thank you so much for coming on. For people that don't know who you are, go ahead and tell us a little bit about yourself.
Yeah, my name is Lajide Richard Lawoyin. I was born in Nigeria. I'm a physician. I practice ICU medicine in the US. I live and work in a town called Statesboro in Georgia. It's about an hour inland from Savannah. I've had a long journey, both as I finished medical school in 2000. So I'm kind of dating myself here. So it's been about 26 years I've been a physician. I was in Ireland for about 5 years. That was where I met my wife. And then I came to the US in 2007. So I've had that kind of a journey.
Excellent, excellent. That's it's 25 years as a background as a physician. That's quite a long time. What made you make the transition and start trying out real estate?
Well, I think it's several factors. Growing up, my dad actually, who unfortunately passed away when I was 15 years old. So that was before I got into college at all. He was a gastroenterologist. He was a physician as well. He trained out of the U.S. at Henry Ford in Detroit. He did not leave much for us. Like, he worked very hard. He was very given. He treated a lot of patients in Nigeria for free. He had his own private hospital, and he was a chief officer for a government hospital where he was a director. So if patient could not pay in that government hospital, he would funnel them to his private hospital to treat them for free. So he gave his all. But when I say that he didn't leave a lot, that when he died in estate, and yeah, things became really difficult for us. He didn't have that many assets, and that was obviously I didn't see it at that time, but that was I went from upper middle class to nothing very quickly, and had to change schools, had to change towns where we're living. There was just a lot of things that happened to me then that kind of gave me a kind of a wake up call, but as a young lad, 15, 16 years old, I didn't see that. So I got into medical school at 18. Long story short, I finished medical school and I went to Ireland. And then I had another friend in Ireland who unfortunately was also passed away after a while, but he had a sense about real estate. And while we're in Ireland, even though it was a short stay with him there, he bought about 3 or 4 properties within 4 or 5 years. And I kind of asked him why, and he said, "Oh, it's you get the property is going to appreciate," and he could see some. I learned a little bit from him, but I'm not even sure that he totally understood the whole picture. But he kind of gave me another kind of interest in it. So when I was done with residency and I started working as an attending, I was like, I think it's time. So I finished residency in 2010, and I bought my first rental property in 2011, and we also my wife had talked to one of our friends, and we bought a piece of land together. We kind of did like a joint venture, and we both built our personal houses there. But with that piece of land, we were able to section a part of it, and we were able to sell it. And this section that we cordoned off and sold, we sold it for almost the price that we bought the whole property, the whole land. So we bought about 13.5 acres. We sold about 2 acres for almost the amount that we bought the 13.5 acres for about a year later. So you could see the rapid appreciation of that because we divided it up. And so things like that happening just kind of popped my eyes open. And it was like, look, this is way to go.
That's very great. I mean, it just goes to show you there's so many different ways. Just in what you initially started, you heard about your friend in Ireland, bought a couple of places, rental properties, and you bought your own rental property. Then you bought land and you chopped it up and did that. And that's, there's just so many different ways to do it. And tell me a little more about, because I know now you're heavily involved in multifamily. How did that journey progress?
Well, yeah, that was another journey that kind of progressed by stumbling into things. So I think that we bought the first rental property in 2011, and then over the years we bought and sold several properties with my wife. So there are some of them that will flip, others will just keep them long term, then we'll sell them after a while. There was a time in Michigan, because we lived in Michigan up to 2019 and then moved down to Georgia. There was a time in Michigan we bought about, I think it was about 8 houses cash, like over like 3 or 4 months. And then we sat on them for like a couple of years and we renovated them during that period. And then we sold them all. And looking back now, we shouldn't have sold them all because we weren't really needing cash. And I don't like checking on the addresses because they've more than doubled what we sold them for that time. But that was what we knew, and that was we're trying to flip them, and that was what we did. But over the years, I think at the peak when we had all the long term rentals, we had about $33. That's dropped now because even just this past month we sold our 8 unit property in Michigan because we want to do other things with the funds. But overall, it's been really, really good to us. It's not always been wins. We've had some losses. There are times when you will want to sell a house and it doesn't sell after several months, and then you have to put it on, put a tenant back in it. And there are times when we've had a tenant that sued us for evicting her after 6 months of not paying. So you have all that to deal with. And some people don't want to deal with stuff like that. And I think during COVID, as an ICU physician, I worked a lot. And I worked here, and then because I just moved from Michigan to Georgia, I was offered to come back to Michigan to help out as well because they were needing physicians to cover. And so typically my work is 1 week on, 1 week off. And when I'm working, I'm on site for 12
You
hours.
want to know the one thing that separates investors who win from investors who get wiped out? It's not the deal flow. It's not connections. It's this: due diligence. Not the skim the deck and hope for the best kind. The real due diligence. Asking the real questions like, who's the sponsor and their team? What is their experience? Does the sponsor have verified exits? What's the downside of the scenario? Are there any hidden fees? If you can't answer these questions and more, you're not really investing. You're speculating or possibly gambling. I built a tool to fix that. It's called the Passive Investor Due Diligence Scorecard. It's free, it's interactive, it's 125 questions across 4 categories. Who is the sponsor's team? What is the market? What are the financials? And what are the potential red flags? You check off what you verify, score updates live. It gives you a clear assessment to help you find out if this is the right fit for your family. It takes about 20 minutes or less, and it could save you years of regret. Use it before you wire another dollar, because the questions you don't ask are the ones that cost you the most.
For 12 hours, 7 a to 7 p. And then from 7 p to 7 a, I'm on call on the phone just in case anything is happening in the ICU that the night physician needs to talk to me about. So for that week, Monday to Sunday, I'm pretty much working 24/7. So, but during COVID, my week off, I would then go to Michigan, and then I work as a night doctor over there covering the ICU. So I fly on Monday morning, and then Monday evening I start working, though I had worked till
Wow.
yeah. So then I would work Monday nights all the way to Friday or Saturday night. Then I would travel back to to Georgia on Saturday or on Sunday. and I'll be back to work my regular job on Monday morning. And I did that for about 2 years. It was hard. And yeah, and it caught up with me at some point. So because of
Yes.
that, I kind of had another wake up call that there's got to be a better way. There's just has to be a better
Yeah.
way. I can't keep working like this. I'm missing time with my kids. I'm missing time with my family and my wife. I'm gone most of the time. Even when I'm here working in Georgia, I'm not at home for 12 hours. Sometimes I'm not at home for 18 hours because I have to stay back at work to do some notes after I'm done. So after a while, I just I started looking for stuff. Then I met some people online, and then I got involved with somebody I call my first real mentor. She's a radiologist, and she she was able to I was able to learn from her. I was part of her pack for mentoring, so I learned from her a little bit, and I started doing things a little bit differently. And then I got to meet Excite, Tenny, and Leslie as well. And since they were the ones that was able to kind of pivot me from the single family, although most of my properties were not actually single family, I only had one single family. Most of them were duplexes, triplexes, fiveplexes, but we just call them single family because I was not really in the real multifamily at that point. So they were the ones that were able to help me pivot from the single family, so to speak, to the multifamily real estate. And then I've done 3 deals with them now, and hoping to be lead sponsor on the next deal.
Excellent. Yeah, I can relate to a lot of that week on, week off, working on the yachts and stuff where
It's 6 weeks on, 6 weeks off.
6 weeks on, 6 weeks off, and then funny enough, when I come home, I do real a lot of real estate, a lot of other stuff as well. So it seems like I work more when I'm at home. But I kind of ran into a few of those things just because I love what I do, love the yachts, love the real estate, and it gives me opportunity to meet people like yourself and have great in-depth conversations and stuff like this. But yeah, it's not sustainable when you get to a certain point when you're not spending time with your family and doing all these things. That's the reason why we're doing all these extra things, but we can't let all that work consume us and get past it. So I can see why you went into that and becoming a lead sponsor. That's the next level of what your progression is, and it's imagine if you never took that step and bought that first rental property. You would have still been, you would probably be focusing more and more on working more
In the ICU,
to
yeah.
keep up everything. Whereas buying the assets, you can put your money to work into those things, whether it's stocks or anything else. But real estate has a much longer threshold, in my opinion, anyway.
I agree.
What has been your turning point? I know that working so much seemed to kind of trigger that, but was there a point where when you saw somebody else, you said, "Hey, they're doing that. Maybe I should check into this"?
Well, I had more of a burning desire inside myself that there has to be something better out there.
Mhm.
I searched, and during this is a long story short. During my process of searching, unfortunately, I got into some bad hands. There was a house that's the only single property I have left now. I bought it for cash in Indiana. Never saw it. Just bought it online. I won't do something like that now. But I was searching. I was searching, and in fact, my wife thought they just that was a scam. That there was no house.
Yeah,
At the end of the day, there was actually a house because they sold it to me, and then they renovated me for me. But of course, they probably sold it to me for about 2 times its value, and they probably renovated for about
yeah,
whatever they spent. But there was still a house there. But what I mean is that I was so hungry for something that I was searching around. I kept looking up the internet. I kept listening to podcasts. I followed a lot of people. Some of them were single family gurus. Some of them were multifamily gurus. Some of them were storage, self storage, whatever it was. I was into everything. Obviously, when you're into everything, you're kind of master of none. But I was hungry. So,
hmm
and unfortunately, because of my naivety and the fact that I was kind of hungry for stuff, then you make mistakes here and there. But
hmm
at the end of the day, that was really what sparked me, was that inner hunger that there must be something else out there. I'll give you a story. The 1031 exchange, we did one 1031 exchange, and I learned about 1031 exchange by because I suffered from not doing a 1031 exchange on a patient on another property of ours because I didn't know about it. So we sold this we bought this property. We were supposed to flip it. It was one of the ones that was supposed to flip, but then didn't sell. So we put somebody in it for a year and a half or so. And then after that, we sold it and we made good money out of it. And we used that money to buy another property, but we didn't know about 1031 exchange. So we didn't go through the process of 1031 exchange because there's a process to it. And then the next year we had to pay the capital gains tax. And I'm like, what is this? Why are we paying this much money? It said, well, it's the profit. So I'm like, there should be. So I started searching. Even my CPA didn't tell me, oh, you should have done a 1031 exchange. He didn't tell me that. Maybe he didn't know. I really don't know. I'm not my CPA anymore. But at that point, I had to search for it myself. So, and that's kind of how I've kind of evolved in real estate until, about a few years ago when I did my first proper mentorship with that radiologist. And that's when a lot of things started kind of making sense and coming together. So I'd learned stuff like kind of scattered all over, as an ICU physician, that's what I know is ICU medicine. But now I'm into dabbling into something that is vast, and people don't realize how vast real estate is and how multi-pronged it can be. And just like we do residency and fellowship in medicine, you need to really do your residency and fellowship in real estate as well, because it's a stiff learning curve, especially if you want to become major in it.
Yeah, there's always do your due diligence. I mean, we always have to, it's always good to also have another person taking a look at it too. Sometimes we can get those deal blinders on where we're looking at something for so long that, we want it to work so bad that, that case in point, your house in Indiana, you wanted something so bad that you wanted it to work. And I did the same thing a few times where I chased a lot of different things until I figured out and kind of settled. But that's kind of your university education in real estate. You're going to make some mistakes and you have to pay the price, and you have to learn to do your due diligence and find the right partners. And I think that's somebody's
still guessing your next move. As an investor, most people have no idea where they actually stand. The Investor Readiness Scorecard changes that. In 5 South, just 10 minutes, score yourself across 5 critical categories: financial foundation, education, strategy, network, and action readiness. Instantly discover your investor phase and get your exact next move. No more guessing. No more spinning your wheels. Take the free assessment now at investwithscottkid.com.
Somebody said to me early on that business is a team sport. And it's the same thing, I imagine, in the hospital and everywhere else. Same thing on the boats. Without the good crew, the good team, nothing happens very well. You can have the best deal in the world, but if you have a bad team, it's probably best to not get involved because it will sink that deal. Yep. And same thing probably in the operating room. If you have a great team and it's a bad situation, the team will probably pull you through.
That's very true. Yeah, we see it all the time. Yep.
And I would imagine a lot of things what are some of the skills that as being in the hospital system for a long time, what are the skills that transfer over to what you're doing now into real estate?
It's amazing how much working in the ICU or in the hospital translates to real estate pretty good. Actually, a lot of my posts on LinkedIn, it's about the similarities between ICU medicine and real estate. So we talked about the different areas of specialty of people. Some people are very good at, like, what I have majorly focused on. I've done 3 deals. The name of our company that I formed with my wife is 3DS Capital. The names of our kids, we have 3 kids. All of their names start with a D. So that's where the 3DS came from. So 3DS Capital. And so we've done 3 deals so far with Excite Capital. And going into the first deal, we We were able to raise a ton of money for that, and we did really well. I guess it was me getting my friends and family involved and all that. It was pretty good. And then the second deal came like a few months later, and it was like almost crickets. But we were able to pull our weight together, and then we did a third deal, and we did okay. But what I'm trying to say is that that's my raising that capital is really what I'm focused at. I'm not very good with the underwriting. I know about underwriting, but I that's where partnering comes through. So I have another person that I partner with who is also a mentee from the group, and she has a financial background. She's very comfortable with the underwriting. She doesn't have that much of a great capital raising capacity like I do. So we partner together. So the partnering and knowing where you're really good at something and where other people can help you out, it's really good. So that really transfers. And because I'm used to working with several departments in the ICU, I call if I need a GI doctor, a gastroenterologist, if I need a cardiologist, if I need a surgeon, a general surgeon, a thoracic surgeon, an orthopedic surgeon. So I know who to get to help me out in different areas of the patient's illness as they progress. So it's partnering with all these people and learning to work with them. It kind of translates. Also knowing other people's there are different levels of people where they are able to really help you because there's a lot of nuance to these things, and sometimes we overlook that. In the ICU, there's a lot of it. Not no two patients are the same, and actually, the same patient you see now may be different from that same patient in 2 hours' time. Obviously, we can predict a lot of things because of the way they look. So when I see a patient, I can kind of get a sense, and I looked at that number, I kind of get a sense of where they were like 2 or 3 hours ago. And if I do, I know what I can do to make them go a certain way or what I cannot do to make them go a certain way in a few hours. But you're not always right. So it's the same thing with real estate. Not no two deals are the same. You need to hone in, just like you said. The people that you work with are so important. And that's some of the issues that have burnt me in the past. There was a time I did my first limited partner that I did. I lost 90% of the capital that I put in there, which for a lot of people will discourage them, which it did discourage me from for a while. I'm like, I'm not touching that cake no more. But after I met that capital and I was able to kind of talk about that there and I saw that they were totally different. So the operators matter as well, but no two deals are the same. And the operators can make or break a deal no matter how good the deal looks like on paper.
Yeah, that's so very true. That's a great tip for anyone getting involved in any type of commercial real estate, investing as a limited partner or partnering with people as a GP. The sponsorship team is paramount. The fund manager is who you are really investing with. Really vet that person and that team and their team. What's their track record? What's their mission statement? What do they have any deals underwater right now? Do they, and why? Because there's not really any of the larger groups out there that if they tell you they don't have any deals that are underwater right now, I would question that because there's, the guys that are genuine will tell you, like even a very large guy, Neil Bawa, he will say, yes, they'll probably have 1 to 3 in 10 deals will be underwater. We have some deals that are not doing well that we're looking to recapitalize and stuff. So, it happens. It's a part of it. I myself have some LP investments. Some did okay. Some did not do so okay. And some I'm still waiting. We'll see where they all play out. Some for 5 years have not really done so great, but that's part of it. You take the risk. It's a part of the learning curve, and because I like to be on both, eventually it's nice to have all the passive income, but I do like yourself, I do like being on the capital side, meeting a lot of people and investing. And now that I'm on the development side of the ambulatory, medical centers and multifamily development and hospitality, it's a whole different type of investor and type of partner because they're looking for more for capital preservation and their vision is much longer term. Whereas what I was dealing with before was kind of mostly a cash flow investor that's looking for that. what would you say is the ideal partner or investor that you are looking for today?
Yeah, I obviously, because I'm a physician, I'm a little biased. My ideal investor will be fellow physicians. I think that physicians, unfortunately or fortunately, have a target on their backs. A lot of this, yeah, private equity firms and all that, they target physicians pretty hard. And I
Yeah.
get all these emails every day and all that. And, because they know that the average physician is a qualified accredited investor. There are very few physicians that
Hmm.
are not accredited investors, except they are very early in their journey. And so because of that, you're dealing with a group that's almost 100% accredited investor. Then they become hotcakes, and some of these private groups will go after them with. So, and I unfortunately, the average physician does not understand a lot of, because I walked into that deal, my limited partnership deal, without asking any questions. I just thought that
Yeah.
was way to go. And
Yeah.
the thing is that you can get burned by the people you're
Hmm.
you're working with. So I feel that because of my background, I'm able to feel with the average physician what they go through, how much they get bombarded with, invest here, invest there, invest there, and what their knowledge gap.
Blueprint, the passive investor due diligence checklist. You found a deal, the returns look great. But before you wire a single dollar, do you know what you're really investing in? Most passive investors skip the hard questions. No PPM review, no sponsor vetting, no exit strategy. They hope for the best. Blueprint fixes that. For pillars of protection, 87 plus vetting questions, a live scoring dashboard that gives you an instant verdict. Invest, caution, or avoid. Work through each tab. Note your red flags. Review your score. Decide with confidence, not gut feeling.
Gap is, and I think I'm able to fill that knowledge gap for them. Not necessarily to invest with me, but at least for them to know that this is the knowledge
Yeah.
gap, and and they can decide for themselves how they want to take that forward.
That's interesting because that's a lot of what I do is people don't necessarily have to invest with me or anything, but I really want them to know that they have those options. They're
Mhm.
available, and this is one of many. What we're doing in real estate, along with other options. Buying businesses and stuff like that. But a lot of them don't understand that they could buy their own practice or
Yep.
build their own medical center or
Yes.
do both, or buy a completely different type of business. They could buy the real estate with a oil change, thing, or Jiffy Lube or something like this. But
Yeah.
they just
Another
don't
kind of business.
understand that it's that close for them, really. But with them getting bombarded so much, it's hard to get a feel of what is real and what is, and I'm glad you're bridging that gap because the financial literacy gap is pretty it's a pretty big divide and I think if the more financially literate people are, the more deals we can do and the more we can actually grow because people will
Yeah.
understand what they're getting into, and that will provide more options for everybody. But that's my big push, what I like to see and what I like to do, because I know that we can do a lot more together. What do you see going forward for yourself and your family in real estate and multifamily? Do you see going into other assets, or do you see focusing solely on the multifamily asset?
Uh, yeah, I think that we're going to stay with multifamily for now. I think that obviously we've been in real estate, myself and my wife, since 2011, but we've really got into that syndication about 2 years ago, in 2024, basically. And that was when we really got into syndication, when we became general partners for the first time. Prior to that, we did some limited partners. So I think that we I think that it's not necessarily that you need to have everybody as a potential client. And it's always good
Mhm.
for people to know you for something rather than know you for like everything. That guy, oh, he does anything. No,
Yeah.
it's good for them. that, okay, if you want multifamily, this is the person you go to. That's almost
Mhm.
exclusively what he does. If you want to do storage, this is the person you go to, because that's almost exclusively what he does. That doesn't mean that they don't dabble into other things from time to time, but they need to have like a base of, this is mostly what we do. So I think I'm personally, for
Mhm.
3DS Capital, me and my wife and our team at 3DS, we're probably going to stick with multifamily assets for now. I know that there's mobile homes. I've looked into them a little bit, and they tend to have a lot of pretty high margin. That might be a possibility in the future, but that's not something we're actively looking at right now. I know with colleagues at Yacht Capital, they're looking into doing something in Nigeria that we might partner with them as well, helping to raise capital. So that's those are the kind of things that we're looking at in the future. And actually, just to piggyback on what you said prior to now about physicians and what they know and what they don't know financially, I didn't know I could use my 401k, because I told you I'd worked in Michigan and then I moved down to Georgia. I didn't know I could use my 401k in a business, sorry, to invest in real estate. I just thought that, 401k just sits there with a fund manager or whatever it is, and they just do whatever they want with it. That was my impression up
Mhm.
until 2 years ago, in 2024, when I was now working with Excitement. They're like, no, you can use your 401k. So I had to go to the bank and say, fund manager, and say, guys, I need that money. I can put it
Yeah.
in real estate. I can put it in oil and gas. It's always good to have that knowledge, but I was there. I'd
Yeah.
been in real estate since 11, but I didn't have a clue I could use my 401k. So it's just amazing
Yeah.
what we know and what we don't know that we don't know.
Yeah, we know what we don't know what we don't know. I mean, it's incredible the amount of money that is on the sidelines in all these 401ks and everything. And I myself, I'm just recently now transferring mine over to a self-directed IRA just because I just haven't done it, and it's something that I know I need to put into something else. It just opens up a lot more other options. And when you think about it, there's probably trillions on the sidelines that could be into real estate and other what are called alternative assets. But, I mean, a lot of times, your broker or your no fault of their own, they get paid on assets under management. So they don't necessarily encourage you to go and invest into other assets that would be outside of their realm of expertise. And they make more fees and everything else out of the stock market stuff, and fair enough. That's their position and their take. Whereas I always thought that if a few of them got together and funded some of these deals and stuff like that, they would do quite well too, because they would probably be the only ones.
They will. You're right.
And they would, and it's a long-term strategy, but that's a whole nother conversation for a whole nother topic. But
Yep.
what's
Yes, it is.
one thing that you wished you would have learned before you got into this? Because I know I've built 125 questions that I give away for free. And most of them are vetting the operator. What's one question you wished you would have asked?
The operator
Yes,
that
the
about
operator or
yeah,
someone.
it's difficult for me to even know what question I will have asked them, because at that point I was so clueless, but I wanted to take action so bad. But I think that I should have looked into their track record. I should have asked them if they've had issues in the past. I should have probably attended like a webinar that they did. So I'm telling you things that I didn't even do. I listened to a webinar of a separate person who is a physician, and he had this podcast and webinars. I listened to him. He talked about those people, and I went to research them and say, "Oh yeah," and I was sold. And I was like, "There you go. There's 150K." So, and it wasn't because I lost 90% of it, and that wasn't fun. I think it
Oh,
was because
geez.
they over leveraged, and I'm sorry, it was 2022, and the interest rate spiked, and the center couldn't hold anymore. So, but
Yeah.
I right now, if I had to face them, I would have a ton and tons of questions for them, because now I know much better than I did at that time.
Yeah, I've done the same. Some of them worked out, some of them did not, but it's a big learning curve. There's a lot that goes into these syndication models and stuff, and they can be very complicated, but like we were discussing before, it's really about the team. If the team was really strong and they would be open with you about what their track record is, what's going on, what their plan is. One thing that I always ask is, what's the worst deal you ever did and how did you get out of that, or how did you fix it? And that's something that I always ask now as a limited partner. And I think it's something that it should be asked because, a lot of times, we've all had bad things. The last couple of years have been tough. It's been a lot of deals have had to be very, very creative, and some of them were creative in the not so correct way. Yeah, well, this has been really great, and I really appreciate you sharing everything and all your journey and everything. I look forward to having you on again after some time to see where the journey continues, because I always like seeing people get, because one thing that I say with a friend of mine, Eddie Austin, is we're just getting started, because, every day is a new day, and every day we get better and better, and we keep progressing. So I look forward to it, because I know this is just the beginning for you guys, and that you guys are going to push very hard to do all these incredible things that you've never thought of before. But with that, what's the best way for anyone to find you guys if they're looking for you and want to talk to you more about what you're working on?
Sure. The best way is on our website. We have a website, 3dscapital.com. That's 3dscapital.com. And we also have, we're on LinkedIn, we're both on LinkedIn. My name's Lajide Richard Lawoyin, and my wife's name is Afolake Lawoyin. We're both on LinkedIn. And Instagram is another way, but we're not as present on Instagram as LinkedIn. So LinkedIn and our website will be the way to get in touch with us. And on our website, you can schedule a call with us. On our website, you can also join our list of investors.
Well, there you have it. I really appreciate you guys coming on and sharing your journey. I think it's a great story, and I know it's just the beginning. Look forward to having you guys on again and hearing more about all the stuff you're working on, because I know the people you're working with are high level and are very, very much go-getters, and will push until you get through a great team. I look forward to it. Well, I'm Scott Kidd, the Yacht Captain Investor Podcast. Just a quick reminder that the best investment you can make is the one you make in yourself. So please invest heavily in you. See you next time.